and gentlemen, welcome to the Crypto Jungle, your source for no-nonsense crypto fundamental analysis and technical analysis. It's been much more of a technical show lately because the fundamentals don't really seem to matter. We are in a bear market that has a lot of supply and a very low amount of demand. So I'm going to take a look at kind of the macro picture. We got some negative news out of the US with the CPI inflation rate. It's higher than expected. So more fear, more uncertainty, more doubt in the markets globally. This is not helpful for a speculative asset class like cryptocurrency. So we're seeing just an inability to rally. Honestly, the theme has been just an inability to rally. Let me go ahead and show you exactly what I mean by taking a look at the king of all crypto. That is Bitcoin. So we're going to start out here on the monthly chart. Taking a look at the monthly chart. Now, the all-time high here, I'm calling back, well, the blow off top, the peak cycle top, I'm calling right here, back in April of 2021. And then this rally right here is a dead cat bounce. The reason I'm saying that that's a dead cat bounce is when you look at the volume, you can see the amount of supply that came in on that run up. Just huge amounts of supply. Here's our preliminary supply mark right here. You can see that in the monthly candles, preliminary supply. That's the whales offloading their shares into strength. And then, the buyer's climax comes after as the order books are thin and stacked to the demand side. Then after that, if we look at the volume, it just drops off. It just drops off. This whole rally right here fell on flat nothingness. So it was just a response to the market. It was a response to the order book and the exuberance of retail investors. There wasn't actually anything backing that rally, even though it made a new all-time high. This is the first time in Bitcoin's cyclical nature that we've had a dead cat bounce that actually printed a higher high. So quite a unique structure overall. We're definitely in a very different structure cycle to cycle. There's always going to be slight differences. So, this is just one of the things that I'm noticing for this cycle. And the other thing that I've been noticing for this cycle is just the relentless downtrend. Now let's go ahead and take a look at this on the weekly. It paints a little bit of a better picture. And this downtrend, man, like in the previous cycle, just to kind of paint a picture as to what I'm talking about here. We would have a large shakeout and then we would have a bounce. And that first bounce was 100% move. We'd get a large shakeout, get another bounce. That second bounce was this 50% move, get a large shakeout, get another bounce. That bounce, again, a 50% move. Now we're really tightening and we got a 25% move. And then it really tightened before the capitulation. We're not getting that. We're not getting that. This has been a very difficult downtrend if you are the type to pay for confirmation to the downside and then wait for a bounce to get out. That bounce has not come. That bounce did not come once. There was this one opportunity here which resulted in a 42% bounce. So yeah, certainly not nothing, but that was it. You didn't get too many opportunities. We had the large shakeout here, which gave us a 20% bounce. And, we've been talking here on the channel that we're reaching a pretty critical kind of support range and that we should be watching for some sort of a bounce, maybe up to $35,000, $40,000. But when you're in those smaller time frames, there's just no demand. There's just nothing. We are flatlined. There is, to put it in simple terms, nobody gives a fuck. Like, that's it. Like, that's just full stop. What's going on? Nobody gives a fuck. Nobody's putting a single dollar into this market. So we have setups and the setups are failing. And the reason the setups are failing is just because we just don't have demand. And that's one of the first laws of Wyckoff is to study supply and demand. There's 3 laws: supply and demand, which is, analyzing the market behavior. Is supply in control or is demand in control? Pretty clear to see that supply is in control. Then there's cause and effect, where, accumulation results in a markup, distribution results in a markdown. And then there's effort versus result, which we're seeing some effort. We saw a little signature right here in the volume, the first large volume signature we've seen in like over a year. And the result is shit. you know, we got a little bit of a bounce, but man, we have not bounced up to this 35. We have not bounced up to the 40, which is showing me that, you know, that it was a very short-term bounce, and it was basically just this demand wick right here, and that's it. So really treacherous time to be in the market, especially if you're new. If this is your first cycle, it's a doozy. It's a tough one. I mean, if it's your first cycle, it's the same result as any cycle. You end up trading a lot of your shit down to zero. But for the more intermediate or experienced traders who do have plans to sell and exit gracefully, it's been tough for them as well. Let's take a look at the daily. So daily, we're still inside of this local consolidation. Let's turn on the RSI here. There is a little bit of, well, there was a bullish divergence, but here's need to curl over and invalidate. If we draw a line on that divergence, we can see that the support structure has now failed, and that will likely come down and test the underside before curling over back down to the downside. Not only that, but you can see this high right here, this double top on the RSI is higher than this structure right here, and that's a bearish divergence in what we're seeing in the price. Now it's a little bit weaker because you shouldn't really be looking for divergences further than the period average apart, which for this RSI is a 14 period average. But you can see that, you know, this rally is lower than the previous consolidation, and this is higher. So, you know, noteworthy. It's just bringing more of that weakness narrative that we've been talking about. So not great. There are still setups out there. One that I've been keeping an eye on is Ethereum. So Ethereum, you know, we've got a nice setup here on the daily. If we turn on the line chart, you can see that this divergence continues to print. So we've got this one right here. Low, lower low, potentially coming in for another lower low. And then when we put it on the RSI, you know, that it's still valid. We've got something here. Now, the thing to take into consideration when going with a setup is you got to go back to the fundamentals of the market cycle. You got to go into the fundamentals of the market positioning. We've noticed in the market thus far just a serious lack of demand. Now, is it pent-up demand? Do we have a lot of money on the sidelines? Are we potentially setting up for a rally? Nothing's off the table, but we have not seen it. So we do need to be apprehensive with these trade setups, because just because you have a bullish setup doesn't mean that you have bullish price action. We don't have bullish market participation. We don't have demand. So do take these things, but just make sure that you're managing risk appropriately. If you don't know how to measure risk, look it up. It's, you know, you need to know your downside exposure. You need to look at your portfolio and think in terms of percentages. How much of my portfolio percentage am I willing to risk on any given trade? We do teach this a lot in the jungle. Links below if you're interested in joining. 25% off till the end of the month on any package that you choose. Links below. But yeah, you know, these setups, I mean, I'll probably, if we dump down here and touch that support range here on ETH, I'll probably take another punt. But the last few times that I've gone long in this market, the setup was clean and the demand just wasn't there. So a lot of those trades ended up failing. So just take that into consideration. Let's take a look at Bitcoin dominance. Bitcoin dominance is rallying again. It's still kind of weak. And when we look at the RSI, we've been watching this slight divergence. It's not technically a divergence because they are both making higher highs. But on the RSI, we are below the 70 level. And if we get pinned below the 70 level and curl down, that's kind of a good setup for this to continue down. Now, if Bitcoin dominance does continue down, that would actually be a good thing to see, and that would make our Ethereum trade actually work out, because it would show that the market participation is going a little bit risk on, and they are willing to kind of dabble in the altcoins. But as long as this chart is rallying, there's going to be little to no demand in this market, and the demand preference is going to be for Bitcoin over anything else, or the selling preference is going to be over with altcoins over Bitcoin. Let's get a zoomed out approach here, zoomed out look at this chart. We are forming a bit of a bottoming pattern. Don't really pay attention to the patterns when you're on the Bitcoin dominance chart, because this is not a chart that's necessarily tradable. It's more of a market feedback chart. The market dynamics between Bitcoin's market cap and the rest of the altcoins is filled to the brim with variables. So don't pattern trade this. Don't even Wyckoff like event trade it. Just observe the trend. If we're trending up, it's bad for altcoins. If we're trending down, it's good for altcoins. You can pretty much sum it up there. All right, good morning, everybody. Where's everybody from? What do you guys think? Are we gonna bounce, or are we gonna get more of just nothingness? And let me know where you're from. I see D Schultz, greetings from Berlin. Hello from Thailand. Where are you all from? Patty, I know you're in the Philippines, so good morning to you. Kahuna, I believe for California. Can you do it more? So let's take a look at some of these other altcoins. One that looked nice, but had a breakout. Here's the thing. This is actually a perfect example of what I'm talking about for failed setups. There are countless ways. There are countless ways to get a trade setup. A trade setup doesn't mean that it's going to go in that direction. Okay, the market needs to be working for you. The market needs to be providing the follow through of the opportunity presented by the setup. So what that means is, you know, when people first get into trading, it's very common that, you know, they look at price and they draw a triangle around price, whatever. And the expectation is because they were able to identify a structure that they're going to trade along the probability. They see something bullish and they're like, well, you know, they get up to the top here and it's like, we're about to break out. This is a bullish consolidation and we're going to break out bullish. Now, this is just not the case. You really need to focus a lot more energy and effort towards market analysis and just simply determining, in your best and honest and objective opinion, do you think that we are in a market that is filled with buyers, or do you think that we are in a market that's filled with sellers? In the current market condition, sellers are the dominant force. Supply is the dominant force. So that means that when we see a bullish consolidation, we see a bullish pattern, you still need to approach it apprehensively. You need to manage your risk. You need to preferably buy the bottom of the consolidation. Don't try and buy the breakout of the consolidation. And thirdly, you need to just expect it to fail. So the market's kind of working against us. And this is exactly what Avalanche has just done to us here. Let me just erase all that stuff. We had a resistance. I'll just mark it resistance. It's a very simple setup. We had a resistance. We broke the resistance. We got volume on a retest. It was all looking good. And then when it came time for it to actually rally and make new highs, it didn't. It didn't, and it flopped over. And now it's just back down here. So it's not ideal. It's showing that the market, just like we said many times already, it just doesn't have the demand. It doesn't have enough market participation. It doesn't have enough people willing to buy and hold as it does having people willing to buy and sell very, very quickly, or just short any breakout. So that's kind of the vibe. That's kind of the vibe out there. La La Land. Bruce Minor in La La Land. I love that movie. Love a good musical. A tap dance routine. Love a good tap dance routine. Yes, it's time to leave Cali. Packed up and moving to Mexico in a few weeks. Congratulations. Mexico. I love Mexico. I think it's a really cool place. It's an awesome kind of, as a digital nomad native to Canada, it's a really good place to be because it's nice to be in parts of the world where I share the same time zone as other people. It just helps, you know, maintain those bonds. And the food. Mexico. You Mexicans, you guys are nuts with your food. You guys are fucking nuts with your food. There's no rules. There's no rules. Like, fry it, slather it in sauce, serve it to me dirty. It doesn't matter. And I love it. Not always the best. I mean, it's never really good for you, but it's nice that you guys are so embracing of culinary experimentation, and you really have no rules. You guys put gummy bears in beer, and I applaud you for it. What is that called? A gourmet? I forget now. Leave a comment if you guys know what I'm talking about. It's like a gourmelada, like a michelada with gummies in it. Sounds disgusting. Don't knock it till you try it. All right. So yeah, let's take a look at the traditional market because that's honestly what's affecting us in the local range here. So let's go to the daily. NAS, this is the S&P. S&P continuing its downtrend. So we've got the middle of our macro channel down here. So certainly some more room. This structure is horrendous. We've been charting this structure for a while now, talking about the distribution here at the overthrow of our macro channel. If we zoom out on the macro channel, this is what we're talking about. So we've got a correction potential down to the mean, which I do think that there's been so much bearishness in the market thus far that I think most people are positioned short, that if we do come down to this level, I think there's a potential for there to be just a composite operator turnaround. Too much of the herd is on the supply side of the trade. So I could see us maybe coming down to the mean and then getting a bounce, and it will be like a pretty epic bounce because there's a lot of pent up energy. As long as we just need some positive news coming from the Fed, we need some sort of monetary policy positivity or whatever the case may be. I'm not ruling it out that if we do come down to the mean here, that we have potential to bounce. Now, we also have room to come to the bottom of the channel. That's going to be devastation. That's going to be blood in the streets. That's going to be fear in the markets. Very, very, very scary market conditions globally. This is going to be headline worthy. There's going to be a reason. There's going to be news. There's going to be bullshit as to why we're down there. Don't listen to it. The markets just move and the news carries the story forwards. But there's potential to get down here. Now, if we start to break out of this channel, we are likely in a recession. We're going to be absolutely in a recession, potentially even a depression, although we don't know if a depression is really plausible or what a depression would look like. I don't think it would look like the 1929 stock market crash, but it's not off the table. It's too bearish to really spend too much time talking about. You got to take these levels one level at a time. Our current level is the midpoint of this channel. If we react positively off that, hey, we got some bullish trades. If we fail to hold it, our next macro target is the bottom of the channel. Just take things one step at a time. Let's take a look at the NASDAQ, which is our higher correlated index. And yeah, it looks like we might be coming down for another test of the 11.5 level here on the NASDAQ 100 E-mini futures, CME futures contracts. I like to look at the futures for this one just because it includes volume. When you're strictly on the index, there's no volume, but having futures contracts will give you kind of a pulse on the market. I'm not ruling out a bounce back up to the buyer's climax. I think that we could go into some sort of consolidation here, but I am apprehensive, specifically when it comes to crypto. The traditional market is bearish. Things are very risk off, and cryptocurrency has become, unfortunately so, it has become tech stocks on leverage. That's all it is. That's all anybody looks at it as. It's tech stocks on leverage. Even fucking retail investors who are new here, you guys haven't got a clue about the potential of blockchain technology. I'm generalizing here. Obviously, some of you get the potential and understand how valuable this new way of organizing on the internet is. But most people just want number go up, and they're here for the gains and no other reason. So, you know, traditional finance is looking at that as well. So, you know, if they have a tech portfolio and they want to apply a little bit of leverage to their tech portfolio, but they don't really want to do it in the form of a derivative, they can simply just add cryptocurrency to the books of that position. And cryptocurrency is just tech or volatile. So, you know, that's kind of what we're looking at. Bounce potential, but I'll believe it when I see it, is kind of the theme, the general theme of the market right now. Bounce potential, but I'll believe it when I see it, because a lot of stuff is just failing out there. A lot of the setups, you need to listen to the market. When you take a long setup and it fails, that's the market saying, look closer. What do you think's going on? Look closer. I was hoping for Bitcoin to pump up to 35, followed by a dump. Looks like we're heading back to 25K first. Stupid inflation. Yeah, inflation's an interesting one. Inflation is an interesting one. Good morning if it's morning to you. Afternoon, and good evening if it's evening. Inflation's weird. So, you know, it's very hard to navigate the space in terms of a hedge. Like, where do you duck for safety? And I'm shocked with my results. I'm shocked with where you find safety, because it's right fucking here, and it's hilarious. The narratives that we have all been consuming, the bullshit, constant, like, arrogant nonsense that we've been consuming for years. Cash is trash. If you are holding cash, you are a moron. We believed this, and it's time to observe the reality, the truth that's in the markets. Where is the hedge? It's the fucking dollar. The dollar is the hedge. The dollar is the hedge. And I've been thinking about this a lot, you know, specifically in terms of, like, you know, real estate prices, other asset prices, they're all going down. Now, real estate is one of the most solid investments in the world. You know, everybody on the face of the planet needs a place to live, and if they want to own the place that they live in, they got to pay for it. It's rock solid. It's rock solid. But we know that they unwind. We had an unwinding in the 2008 financial crisis. We're kind of setting up for some interesting times ahead, and even real estate is going to get hit. I think that real estate is really going to get hit, and I've actually made the decision to get out of real estate. I want more cash. I have I have a position in real estate that I'm wanting to liquidate and get a cash position, because, you know, cash is really, really cheap, and people who are inexperienced in the markets are getting very, very used to cheap cash. If interest goes up, cash is no longer cheap, which means there's people who are over leveraged, who are going to start to really sweat based on the interest payments that are going to be coming with whatever loan they're taking, whether it's an automotive loan, whether it's a line of credit, whether it's a mortgage. It's going to be harder to service those debts. What that forces people to do is it forces people against their will to liquidate. And when they liquidate, you see a cascade in valuations. See a cascade, a huge unwinding. This is exactly what happened in the financial crisis of 2008. People could not service the mortgages. So if we see that, you know, I've always had it in my head that I want to hold real estate because it's such a solid investment. And now I'm just like, no, it's not. It's not. We're so delicate right now. The best investment you can make is holding the fucking greenback, the US dollar. It is the one that is outperforming every other currency while every other market is going down. I don't think there's room for anything. Even gold is not performing where it should be. Oil has been on a tear. Let's actually take a look at oil. Take a look at oil futures. No, not Mexican. No. Futures, come on. Oil futures. Just the US. Where's the US price? Help me out here, guys. Spam a ticker. No check oil enough. Okay, well, I guess it's this one. No, that's the one that has no data. Ay, ay, ay. All right, well, we'll go with that. The price is right. So we've been on a rally. But, you know, we can certainly reverse here. Because here's the thing. Like, if everybody stops, you know, if everybody starts to really tighten things, we're going to see a lot of layoffs. If we see a lot of layoffs, well, now you don't have people going to work, meaning that you don't have them driving to work. Or you have people shutting down businesses, which means that they're not consuming as much. I think that, you know, oil has kind of been filling the narrative of a safe haven and as a hedge. But if the economy slows down, we need less oil. And that's just a fact. If the economy slows down, there's going to be layoffs. There's going to be companies going under and bankrupt. There's going to be businesses shutting down. And all of those factors are consumers or demand for crude oil. So yeah, it's ugly. Got to be very apprehensive. So yeah, the dollar is looking better and better. Let's take a look at gold. Gold is, you know, it's made a new high. We're in a reaccumulation pattern. So gold could rally, but the thing is, if we get a meltdown, like if we get something rather aggressive, if we get an aggressive shakeout, it doesn't matter what you in. It doesn't matter what you're in. It's going down except for the dollar. The dollar is the only one that'll be going up in that circumstance. But you know, credit where credit is due. This is a local consolidation. It's actually looking quite decent. You know, you've got the buyer's climax. Lay down some labels here. We got our buyer's climax. We've got our automatic reaction line. Go down here. We've got kind of an over exuberant move to the downside, which is, you know, technically a sign of weakness, but it's not in a super volatile way. We've got spring defending this kind of level with a tightening of the spread, sign of strength now coming in for our backup. So if this really is an accumulation, we're either going to spend a little bit of time on top of this line before breaking out. And if we break out, we will rally. If we break out, we will rally. So we'll have to watch gold futures. You know what? Actually set an alarm. Set an alarm. Crossing once per bar close on the weekly. Give me once per bar. Let me know before the week is. And yeah, this is not a bad structure. This looks like it could rally. But, you know, like I said, if we get a really large shakeout, it doesn't matter what you're in. It's going to try and shake you out. So position conservative if you're trying to hold through, and if you're trying to really create a hedge, you do need to position low, position conservative, and be comfortable without a stop. Like that's where things get harder to manage risk. If you're going to be taking positions without stop losses, your position sizes need to be small. They need to be small. You can have a mental stop. The reason that you would run without an order stop is just because, like I said, the volatility I could see increasing. I could see a big increase in volatility. So because of that, if you're going to position in these hedged positions, keep your risk low and keep your stops mental stops. But yeah, not financially. If you're new to trading, just chill. Better times are ahead. Better times are ahead. They always are. This market never changes. Always make better times. Go back to the DXY. Very strong reaction off of the inflation news. Very strong rally. All right. PH1, thank you. Thank you, Doppel. WTI, chicken, and what is that? Chicken and a... Those are the hedges. Chickens and guns. Depends where you're at. Depends where you're at. 17K. I think lower, honestly. I think lower. When we take a look at Bitcoin on the kind of the macro structure, nothing is built at 17. Like 17, it's a pretty arbitrary number. I'm not being critical. I'm just looking at what I'm seeing in the charts here. You know, where does 17K come into play? Is it here? Is this where 17K? No. Here, I think that's pretty optimistic to think that this wick off of a dead cat bounce could hold significant support. Our significant support is down here. Our significant support is around $11,000 to $12,000 with the potential of even 9,800 coming down. That is going to scare the shit out of people. You are going to hear every reason under the sun why cryptocurrency is dead and never coming back. This is complete nonsense, complete bullshit. Don't listen to people. There is, without a doubt in my mind, you know, we're still early days of cryptocurrency. I released a tweet the other day kind of comparing what we're seeing here to early Amazon. Now, if that fractal plays out, not only are you early, but you're actually too early. You're actually too early. Let's actually, I'll show you what I'm talking about here. A stacked comparison. And we'll do Amazon. Amazon. Yeah, not having a good day on Amazon. So Amazon had kind of this interesting triple top pattern. And this isn't off the table. Had this blow off top to shake out, blow off top to shake out, blow off top to shake out, and then a downtrend into some pretty steep correctionary levels. Now, that could also happen with Bitcoin. Like, we are talking about a bounce potential. And I think if we get some positive news in the fundamentals of the markets, and there is some sort of rebound, if there is some sort of recovery in the NASDAQ and, you know, the greater traditional market as a whole, then we could see, you know, some triple top potential, and holy fuck would that piss people off. That would really dishearten people. If we got some sort of bounce, if we got some sort of structure, let's say we come down here and we bounce and we just go for a new all-time high, and then come down to fucking 10K. Woo, that would be nasty. That would be nasty. So this theory is just based on this fractal right here. The reason that I'm looking at this is because this is very, very early days Amazon. This is when Amazon made it to the public markets. And this cycle right here represents Bitcoin coming to the public markets, coming to traditional finance. This traditional interest being built into the price cycle of Bitcoin. Everything else before it was parabolic because everybody was on board. Now we have traditional finance is here, the institutions are here, and this is the potential effect that they're having over cryptocurrency is just, you know, make their money and then dump it and leave it. So, you know, if this plays out, we could trade down to 10 grand, maybe even less than 10 grand. But the kicker really is, you know, the accumulation period that Amazon went through for that was long. You know, we didn't start trending again for 3,000 days. So it'll be a long accumulation. That being said, honestly, like if this, you know, this is honestly, it's a bullshit theory. Fractals, I don't really pay attention to fractals, but if we look at Bitcoin as a network effect for user adoption, which Amazon is an incredible representation of. Think about early days of Amazon, nobody gave a shit. Early days of Bitcoin, nobody gives a shit. Then eventually Amazon is just everywhere. It's literally like a a way of life in the US. It's just like, you want something in 2 hours, you got it. It's very, very established. And I think that Bitcoin can potentially be the currency of the internet. And guess what? Everybody uses the fucking internet. So it can be really thrown in your face. If something like that plays out, you know, this is how you not only get to $1 million Bitcoin. This fractal, if it plays out in terms of percentage gains, gets you to about a $2.4 million Bitcoin. So that's moon boy talk. You know, I'm not gonna stand here in a fucking really bearish market filled with supply and say, just hodl, guys. We're gonna make it to $2 million a coin. But if this fractal plays out, and if this is where we are in terms of the adoption of cryptocurrency and the adoption of Bitcoin, you know, we've got a few years of accumulation, and then we start another hyperwave. And the hyperwave, we've already had a hyperwave in Bitcoin. And it was this period right here, flat, 45, increased, and then increased to a blow off top. So you want to talk super cycle? This is how you build the cause. Second law of Wyckoff, cause and effect. You need to accumulate to build a cause so that you can mark up. The longer you accumulate, the larger the markup. So in all honesty, if you could have 5 years to accumulate $10,000 Bitcoin with the conviction that one day it'll be at $1 million, potentially even $2 million, that's a good deal. That's a good deal. I'm on board with that. I'm okay with that. I'm happy to build with that. That's, you know, it's as bullish as I can get right now as far as the potential. There's no doubt in my mind we'll see these types of valuations for Bitcoin. It's just, how do we get there? How do we get there? What does it look like? What is the journey potentially going to be like on our way to that type of valuation? And as it stands right now, you know, we've got recession. It's going to be hard for Bitcoin to go to $1 million in the context of a recession. I do not care what you think about inflation. Bitcoin is not an inflationary hedge. Not today. Maybe tomorrow, but not today. It is not an inflationary hedge. Get that fucking bullshit out of your brain. All right. Catch up with the chat here now that I've done ranting about fractals. I never do fractals. Stagflation is happening. Food, transportation. American Silver Eagles have a $15 to $18 premium over spot due to shortages. Interesting. Until pension funds allocate to BTC seriously, it'll be some time before Bitcoin truly becomes digital gold. Yeah, you know, the digital gold thing, I agree that is one application, but man, there's so much more that Bitcoin can do. So much more that Bitcoin can do. I really think that I get it. Store of value kind of makes sense. Not in this context. Obviously, there's no such thing as a store of value if you lose 90% of your value. But in the right context, when you're in an accumulative holding pattern, yes, it makes sense. But when you're in a speculative bubble, no, it doesn't make sense. Bitcoin does way more than just store value. Bitcoin does way more than digital gold. Oh, want to be famous? All right, let's ban this douche. What do I ban from the dashboard here? Gravy, can you ban that guy? If you're watching. Where was I? Got distracted. Yes. So, but Bitcoin does so much more. With the development of Lightning and smart contracts coming to Bitcoin, and DeFi coming to Bitcoin, and decentralized exchanges coming to Bitcoin, that's just kind of the finance side, the decentralized finance side, which is very, very valuable. But then not only that, like, we can literally transition the stock market away from the stock market, the New York Stock Exchange, and we can set up shop on the Bitcoin Lightning Network. Could you imagine if Bitcoin held the stock market? If Bitcoin was the trading pair of the stock market? This is the future that I see. Is it coming in the next few years? Is it coming next cycle? Fuck no. You have to be realistic. No, it's not. It's not. It's not even close to happening. But it's a very, very, very real potential. It's a very real potential. To me, it's a no-brainer. It's an eventuality. It's just a matter of time. But reality is, no. Development takes time. Development takes time. These devs are working their ass off. And they're making products better and better and better. They're making user experiences better and better and better. They're making applications for business owners to accept cryptocurrency easier and easier and easier. You have to give them time. And I'm not talking like months, I'm talking years. I'm not talking quarters, I'm talking decades. You know, you have to give them time. I heard Solana aims to be the network to run the stock exchange. I have my doubts though. I don't think Solana is going to make it. Really don't think Solana is going to make it. Certainly not in the world of finance, maybe in terms of gaming, maybe in terms of membership custody and, membership NFTs and ticket sales. But as far as decentralized finance, it's not decentralized enough. The block size of Solana is too large and they collect too many blocks too quickly, which means that it's very, very hard for the world's all of the world's participants to run a node. Okay, and this is a part that a lot of people don't really understand, like how important block size is and how important running a node is and how accessible running a node is. A lot of people don't understand this. There was, if you remember back in 2017, there was a fucking fight, like a huge fight that split the Bitcoin community from Bitcoin to Bitcoin Cash. The entire argument was based on block size. Why? Because the blockchain is a big piece of data. It's a big piece of data. Right now, the Bitcoin blockchain is about 2 gigabytes to download. 2 gigs of just files, okay? With Solana's blockchain size is growing too large because we're jamming too many transactions into the blockchain. So it's going to run into storage inability. And when it has storage inability, you're going to not have retail investors running nodes at all. This is not the path to decentralization. Decentralization means that I should be able to pick up a small, cheap computer and I can contribute to the network with minimal costs and minimal storage requirements. Solana is just going to grow. Here's what's going to happen. Like right now, what's the biggest hard drive you can get? Like a 5 terabyte hard drive. I'm sure you can get larger ones from specialized computer stores, but they're very, very expensive. Typically, people will buy a 1, 2, maybe 5 terabyte hard drive. The problem with Solana is the speed at which the blockchain is growing is going to be faster than the hardware can keep up with. So eventually we're going to get to the upper limits of the hardware requirements, and then it's going to push beyond that, and it's going to be way too expensive, and it's going to go to businesses. It's going to be the business's responsibility to upkeep the hardware requirements to run a Solana blockchain. And that is the opposite of decentralization. This is why we kept the block size small. The percentage of financial class that will be hungry is staggering. Yep. We're going into World War, potentially. I mean, everybody seems to think that there's potential. I don't really want to discuss heavy topics here. I think we all kind of have our theories, and we'll leave it at that. Why though does it need to be decentralized? Serious question. In the world of finance, we want to avoid control, which is why I said that Solana is probably better. It's more appropriate for gaming and like memberships and like stuff that has low stakes. But when you're talking about the large, like the big picture of finance, the big picture of money, who has all the money has all the power. That's like the long and short of money. Whoever controls the money has all of the power. So why decentralization is really important in the context of money is it makes it very, very difficult, more difficult than we have today. It makes it very difficult to centralize power. You can obviously centralize power in a decentralized system, but you will never end up with a Federal Reserve Bank. You'll never end up with a central bank of the world. You will end up with global powers, countries, fighting for market dominance in a fair and competitive capitalist market. So decentralization incentivizes smart thinking, critical thinking, and preservation of wealth of a nation. If you have a money printer, if like the US is a perfect example. The US is the global reserve currency. It's the currency that we use for international trade. Doesn't matter if you're from the US or not. You know, if you're Turkey and you're trading with China, you're probably settling on the dollar. When you have that much power, you can just print. And when you can just print, you have an unfair advantage over every other country on the face of the planet. Whereas in a decentralized system, you need to uphold your power. You can't just print. Like if you just spend and spend on military and grow and this and that, it doesn't do anything except spend your Bitcoin. So ultimately, you get less power. The more you spend, you get less power. So it creates a budget, inflows and outflows. What is my competitor country doing? I need to keep up with my competitor country. I can't squash my competitor country because I can't just print into infinity and make sure that they never have the power to do anything. I need to fairly compete with my competitor country so that I can maintain my ranking in the world order. That's why decentralization is important, because it creates a new set of rules that everybody needs to abide by, that can't be manipulated, that can't be adulterated, that can't be corrupt. You know, there will be corruption. There will be corruption in government. That's never going to change. But when you remove corruption from the money, we've got a much more fair world. We've got a way more fair world. So that's kind of the important thing of decentralization. Do you own a business? Yes. Own a couple. This is one of them. You're watching one. All right. I've certainly ranted long enough, but that was nice. You know, getting back to the reason that we're here. The reason that we're here. Why? Because it doesn't really make sense when you think about it from a technology point of view. It's like, this is a very expensive way to run a ledger. Blockchain is the most expensive way to run a ledger. Like, we can do it way cheaper. Why don't we do it cheaper? Because decentralization is what we're fighting for. Decentralization, the new rule book, the new set of rules that are going to force governments to think and look at people and be like, shit, you know what, guys? I think we actually need to respect people's wealth. That's a bit of a pickle. It's going to get governments to respect wealth. It's going to get nations to compete evenly. You're never going to have a central power. We're never going to run into the circumstance where the US is just the global power and there's nothing that anybody can do about it without war. It's going to reduce war. It's going to make things fair. It's going to keep debt out of the system. There are so many net positives for blockchain technology with decentralization. It's honestly, it's the age of Aquarius. Like, we are going to change the fucking world with this tech. It may not happen today, may not happen tomorrow, may not happen fucking 10 years from now. But honestly, this is going to be the key to the kingdom. This is how we change the world. So with that positive note, I'm going to close it out there. Thank you all for joining into the live stream. If you're new here, I want to invite you to subscribe. If you like this content, hey, share it with your peers. And yeah, until next time, please trade safe. It is a jungle out there.